Hello and welcome. You are watching Business Plus here on News 9 Live. I am Krishna Kumar and we begin this edition of Business Plus with a big story about those companies in India that are not listed but want to list, not in Indian stock exchanges, but overseas. That's right, the Ministry of Corporate Affairs of India has now come out with notifications on how unlisted Indian companies can raise capital overseas by listing themselves on their stock markets. Bear in mind, it's not the first time that Indian companies will be listing on stock markets overseas. All your big companies from Infosys to HDFC, all of them are listed overseas, but then they're first listed here in India. Either that, or you have companies like Freshworks, an Indian company but with a registered office in California that listed at the New York Stock Exchange. But so far, the only thing that remained was how do companies not listed in India get to list overseas and overseas stock exchanges and raise capital from those countries. For now, they've been given the go-ahead, and the Ministry of Corporate Affairs has given notifications under Section 5 of the Companies Amendment Act of India of 2020. What does it mean for businesses? What it means for businesses is that they are now free to go raise capital without bothering to ask the Indian stock markets for anything. What does it mean for investors? Well, that's what we're going to find out. But we'll begin by asking Karthik. Karthik, talk to us. Unlisted Indian companies can now go list on foreign stock exchanges and raise capital from there. Great news for Indian companies, isn't it?
I think excellent news specifically for startups, specifically for companies that employ a lot of technology in their core businesses, Krishna.
Right.
Now, if you remember Freshworks, since you spoke about it, Freshworks had a NASDAQ listing at a time when the Indian stock markets did not have too many Indian startups, taking the IPO route. You had a handful of them. You had Paytm, perhaps you did not even have Zomato at that point. You did not have Nike at that time. These are Indian tech companies that have dabbled with Indian IPOs. But I think what changes specifically is, let's say, NASDAQ. The composition of NASDAQ is such that the investors who invest in NASDAQ listed companies have a better understanding of technology. And hence, you are not under pressure of showing profit quarter after quarter for your stock price valuation to reflect correctly as per the core operating principles of the company. Now, what changes specifically right now is that you don't need an Indian listing, definitely. You can have a US based perhaps or any international stock exchange as the first port of call when you want to do your IPO. Now, what remains unanswered yet is which are these stock exchanges that would be permitted to list Indian companies without their listing here in India first. And secondly, is there a momentum there for Indian investors, retail investors specifically, to try and latch on to and and invest in those beautiful companies, tech companies that we know of, despite them not being listed here in India?
First up, I want to ask you the first things off my mind. This makes sense when Indian companies are saying that no, Indian stock markets are not doing all that well. There's not enough demand. There's not enough demand for capital. So in that sense, we're better off going to some other stock market overseas. But you're looking at a time where Indian stock markets have shrugged off everything from the Ukraine war to the Israel-Hamas war.
Right.
But either way, the point here is that investors now look at the way Indian investors are reacting to the IPOs. In today's India stock markets, IPOs are listing at least 30 to 40 to 50% premiums.
True.
So in that sense, when these companies go away to foreign shores to list themselves, are Indian investors going to be missing out in that sense?
So that's something that I think is yet to be seen. We have also seen great Indian brands like Make My Trip listing in the New York Stock Exchange.
Right.
We've seen Freshworks, an Indian origin founder-led California registered company investing in the NASDAQ.
Yeah.
We've seen companies like HDFC and companies like Infosys that have done both Indian as well as international listings.
Right.
To my limited understanding at this moment, Krishna, I think it is a great deal of optimism for tech-driven companies, which feel that perhaps their true value will be unlocked only if you invest in a house that understands technology better than perhaps how Indian investors understand it right now.
Well, it's just a matter of making sure that you list on the right exchange to find the right value for your company.
And the right investor, the right retail investor and the right institutional investors who understand those core businesses very well. I think that is going to be definitely a great pull for Indian startups, tech-driven startups, to explore listing abroad. And this listing abroad is unlike the SPAC listing, the special purpose acquisition vehicle, wherein there is already a pool of investment ready and you go and you ride that SPV route. But this is going to be pure play IPO driven investing.
Right, fair enough. We have Mr. Amit Gupta, founder, FinTech Capital, with us here on Business Plus. Amit, talk to us. How do you view this latest set of guidelines and the doors opening for unlisted Indian companies to list themselves overseas?
So, any company which is already listed in India is in any case eligible for foreign secondary listing even today. However, unlisted companies are unlikely to allow to be listed anywhere by the government. If a company decides to, let's say, list in China, I don't think government will be allowing that. So I think one aspect which is not yet clear, I think it will get cleared probably in the next couple of months. Is the fact that which jurisdictions will be allowed by the Indian governments to allow this listing. There is a possibility that IFSC in GIFT City is expected to be part of that jurisdictions for the overseas listing. Traditionally listing has been a very domestic process as companies generally raise capitals and list it in the local exchanges. That's because company and its business are best understood where they operate. But because of these tech companies which have come into the picture in the last 5 6 years, the paradigm have sort of changed, and more tech and tech-enabled firms have a global footprint. Also, investors across the world are looking for stock that could give better returns or faster returns. So they are open to investing in the companies from the emerging markets. So that has sort of created a demand for the overseas listing of these companies.
Amit, hi,
Right.
sorry to
Yeah.
butt in. Amit, just want to understand the direct impact on Indian retail investors. How do Indian retail investors participate in an IPO of an Indian brand, an Indian company, tech or otherwise, listing abroad? Will we have to take the FOF route? Will we have to wait for these companies to become part of a mutual fund or a fund of funds? Or do you see there is going to be enough momentum for retail investors to buy these international equities directly as well? And what changes for the Indian investor?
So I think in the past, couple of years, the Indian mutual funds and insurance firms they have shown to invest, in the new age businesses. They've invested in Paytm, Zomato, Nykaa, Card Trade, etc. But their experience of investing in the tech firms there involves a lot of compliance and a lot of work. So there have been very few mutual funds, I would say less than 5%, who have been inclined to actually invest in the companies which are listed, on the Nasdaq or New York Stock Exchange. So they are unwilling to take the risk. I understand the reasons why they do it because double compliance is a major challenge
Yeah.
for a lot of these companies. Also, there are FOF routes, but given the recent taxation changes, now you pay more tax to invest into it. So that FOF route is also become a little expensive to invest into those companies.
All right.
From a taxation point of view and from an investment convenience point of view, the things have become a little difficult to invest into these companies if they are listed abroad.
So my fears are proven right. Although it's a bonanza for Indian companies, tech companies and tech startups, the Indian investors could most likely miss out on some of these wonderful ideas and companies created right here in India and eventually creating value in a stock exchange overseas. But then at the end of the day, it's the right stock for the right set of investors seems to be the equation that's being formed over here. Amit Gupta, we're going to let you go off of this stage. Thank you so much for taking time out to be with us here on News 9 Live.